Up. How are you guys doing? What are we trading? Just crypto? Hope some of you have been killing it on long dollar. I couldn't be more adamant about how bullish the dollar was looking weeks ago. It's been a great call. My Forex team been lots of money to made. They're doing great. That's when you think about markets, guys, overall, where all the money's been made this month, it's definitely not been in crypto. Commodities, not really. It's all long dollar. If you're making any kind of alpha, it's long dollar. What's up, Douglas? Long ether from 570? 570. Netflix. Okay. You're long Litecoin. You guys long today or long from 3 years ago? I got screens all over the place. Give me a second. I want to put the video on too. You guys see my Thinkorswim screen? We got Bitcoin features at new lows. What's up, Ruben? Neblio. Whoa. That must be a crypto name. Long gold. All right, Dims. How are you, man? Long gold makes sense when the euro's at new lows, right? Dollar up. You nibble a little bit on gold. Anytime the euro rallies, dollar dips, you kind of reverse that. I like it. All right. There we go. I'm not on mute, am I?
No, you're good.
All right. Let me make sure I got my cash charts up. If I flip to crypto, can you guys see this? I'll just go to Coinigy. What's up, Stan? How are you, buddy? I was still thinking about if I can meet you in LA, partner. How far is Malibu? I mean, I know the traffic is horrendous in LA, but I would kind of like to meet up with you. I mean, I'm trying to get. I was thinking about taking my girl to the beach, and it's like if I catch the wrong hour, is it going to take me 2 hours to go 20 minutes to the beach in Malibu? I don't know. Yeah, we might have to message a little bit more about that. Maybe Friday. Anyway, it's nice. I mean, you guys are all over the world, so if I get a chance to, sometimes people come in. Like we had the blockchain stuff in Toronto. Got to meet a bunch of you, and we had the crypto stuff in Miami. It was nice. I haven't gotten out to LA in forever, so it's the first day in probably 3 weeks. Ritas and Alec were down here yesterday. It's been raining for literally every day for 3 weeks, and today it's absolutely beautiful. So I was over at the golf course at lunch.
Yeah, of course, the day after we leave.
Right. Chuck Hughes on. Fighter pilot. I think we're good. Hey, what's up, Magnus? All right, so you guys want to look at crypto? I guess let's start there. I mean, there's really global macro. It's all long dollars, the name of the game. And if you're just coming around to it, I think it's hilarious that I really hate watching CNBC. Even Bloomberg's horrible. They're so political, left wing slant. I don't care what your politics are. They don't report what's actually going on. They just want to push their agenda, and it's just the old wall media is just horrible. And so the only reason I pay attention to it is just to see what the narrative is and see what the groupthink is. And what I find interesting is that this week now people are starting to come around to this idea that, oh, emerging markets are maybe in trouble. You think? We just had a massive move in the dollar. Everybody's long euros on the highs at 125. Everybody's saying pick your favorite guru that's dominated the headlines. Peter Schiff. All these guys have zero timing process, absolutely zero. And they want to forever say the dollar is going to zero. It's perma bears on the dollar. And they couldn't get it more wrong. And we've been saying the dollar has been in a long-term bull market. It held exactly where it should have. It's been a great call. And that's where all the money is being made right now is long dollar. It doesn't really matter what FX pair, but it affects other markets. I mean, emerging markets have been getting crushed. So it's funny to see that the mainstream is finally picking up on it. And maybe you don't want to be chasing emerging markets right now because, oh, the dollar's absolutely exploded. And this is probably the first part of a serious move higher. I've talked about it forever. So here's the dollar. This is the weekly. We slip back up to the monthly. Can you guys see this? I mean, you can build all kinds of narratives. You can act like you are the God's gift to finance and come up with all kinds of stories why the dollar should go down, deficits. That's one factor. There's lots of reasons why. The majority of what causes currencies to move is all capital flows. So what Trump did a good job of was changing the tax structure and following through on what he said he was going to do. And so if you see the dollars come home to the US, I don't care what the deficits are. I don't care what all the other little headlines say. That's a massive dollar flow on top of the fact that Europe is a disaster. And what you're going to get is a continuation of this long-term bull market. And I've been talking about this forever. The bull market started in 2014. Right here, guys, 2014. Oil collapsed. The euro was just absolutely no bid. But you don't get these types of moves and then they just go away. We had a lot of ebb and flow, but this is a natural pullback halfway of this initial move up. My traders know this is a wall concept, right? The market held halfway, right where it should have. And I'm telling you right now, this was a higher low. The next 2-3 years, dollar is probably going to be at new highs. And that's what's going to break the back of the world economy. It's not dollar down, everything's fine. When you start to rally the dollar, anybody has big debt positions, dollar denominated, everything comes unwound. And this is the start of the biggest global macro move right now. It's not about stocks. It's not about gold. It's the dollar and it's the bond market. if you look at Italy, what we've been talking about, the peripheral bond markets in Europe, this is a direct correlation to the confidence collapsing in the periphery of these bond markets that are just totally overbought. You're at 5,000-year highs in the bond market, which is 5,000-year lows in rates. Negative interest rates was the biggest disaster probably known to finance. You're going to look back in 10 years from now and say Larry Summers, these academics that came out of Harvard, these globalist guys are full of shit. They have no idea what they're talking about when it comes to markets, and negative rates was a disaster. And I'm telling you, this is the start of it. You get a dollar rally, it's going to totally unwind markets in a lot of different ways. There'll be a lot of opportunity, but this is the biggest thing going on in markets right now is this dollar rally. And everybody was on the wrong side of it at the beginning of the year. There's still very long euros. I think this has a lot more to go. And not very many shops will take a step back and look at a monthly chart. Everybody wants to focus on, what happened in the last 6 months. And anybody that's staring at a daily chart, well, here's a daily chart, 20 years. And they think this is a bear market, but they lose perspective of where we just held. But getting through 90 on the DXY, we covered a lot of euro shorts here into pi. Doesn't mean we can't go higher. It's just this is the right place to wait and see. We might have a little bit of a counter trend rally on the euro, maybe a dollar pullback. That would be a gift. We could reset shorts on the euro. I'd love to buy the dollar again back here towards 92. But my traders know we were taking profits right into our pi line. But I think this is just the start of a very big move higher. There's really good resistance here. 95 on the DXY. If you want to flip that, you guys all know that dollar index is mostly made up of the euro pair. So that basket, the way it's derived, is mostly the euro. So it's the opposite. But the euro is, so I covered a lot of my core short here into pi, and I'm going to wait and see. If we break pi, I'm just going to lay that short back out. If we rally, I've taken a lot of my short risk off, taking profits. If we rally, great, we'll put it back out. But this is the biggest trade in markets right now, global macro. Yeah, we'll look at Litecoin. All right, I guess that's all I'll say about the other markets, guys, outside of crypto. I've been talking about that for forever, so it's all timestamped. But my guys know. So if you're part of our crypto team, we've been talking about these cycles here, and I've probably been the only person talking about really nailing these two cycles and that they exist. And so it was 10 for 11 of the last 11 cycles, 10 for 11 that we had a turning point. And I was waiting to see what happened here with this turn. And we got a little lower high, but we did have a turn there. So this is, I guess, 11 for 12. But you guys all know this, right? There was a high, boom. There was the low with the cycle. Here's a high with the cycle. Here's a turning point right there with the cycle. Here's the low with the cycle. Here's a high with the cycle. Here's another high with the cycle. Here's a slight small turn like we just had with the cycle. Here's a bottom with the cycle. This one, we didn't have anything happen. That was the one that we had no turn. The market was moving up and didn't turn right there. That was the only one that we didn't see a high. Right here in front of the 200 at 10,000, we had an exact high. And then, a couple days ago, very subtle, but we did have a lower high with the turn here. And then, so I think we're probably going to see some weakness right back into 6,500, 6,000, right in line with the bigger wave. Hopefully this is not too much crap on the chart. Guys, this is the big 8.6 cycle. But just like it produced the major highs up here, it produced the lows here, it produced the lows here. So these are turning points in time, right? Doesn't mean you get a high. It just means it's turning points. So we got a low, right, with the cycle. Now it looks like we're going to cycle into the end of May, and I think we should look for a low right in line with the price down at 6,500. You guys see that? Maybe I need to get this stuff off of here. Halfway on the week, Doug? Yeah. I'll talk euro. Kind of already did, but so a couple of my traders like, how are we playing this? What are we doing with this low here? What are we doing with all this weakness? It shouldn't be a surprise, guys. We've been hedging on the intermediate term with futures. I cut my risk on Litecoin right in the lows at 129, and some of you guys got all bothered because we rallied for one day and now we're at new lows. One day doesn't make a trend. So I think the market definitely right now, there's the path of least resistance is to retest 6,500. Anybody that wants to make the call that that we're going to 5,000, I don't understand why you want to make that call. Why would you make the call that we're going to 2,000 when we've got to break the lows first, right? There's no sense in making a call that the market's going to break to lower levels like 5,000 or 2,000 when we haven't broken any major lows yet. The call right now that I'm making, just like we made here in front of 10,000 with this cycle, is right in front of the 200. 10 was a good place to take some off. We were buying here. We were buying on this candle. But this is where you got to be taking some profit on strength. And then I cut some risk right here on not necessarily on BTC, but on some other pairs that broke this higher low. But we took out our pie line, right? And now we're clearly making lower lows. So anytime you want to try to buy lower lows, it just doesn't, it's not a high probability setup to constantly be buying lower lows. So the timing piece says just be patient. The reason I was trying to tell our group to raise cash here and on the break of pie, I mean, if you sold here, guys, it makes sense to add a little back of pie, but we didn't get the follow through. That's why Friday, I mean, I was up late putting sell signals in to raise cash because it just doesn't line up that from a timing and price perspective, we could easily pull back to lower levels. But I find it interesting that this is really lining up with a cycle retest of the lows right into the major wave here in the next week, the last part of May. So how do you play it? You raise cash. You should have raised cash on a couple of these other sell signals. But you don't need to be rushing in to buy here. You can just wait. Let the market prove itself. 6,000, 6,500. My maintenance guys are here on the lawn. Hopefully you guys don't hear it. And I'll just tell you right now, from a timing perspective, so I'm always big about if-then analysis. It's not about, I have a big ego and I'm going to make a call that Bitcoin should be at 40,000 by the end of 2018. You see the sell side guys, Tommy Lee at Citibank, he's terrible. And I don't have a problem calling those guys out because I've listened to them on Wall Street for forever. They're just terrible. They have zero timing. Making that call is not helpful. Making the call that you should probably take some off in front of the 200 right into the cycle, that helps you manage risk. That helps you make money. If you bought on the lows where we were buying, bought Cardano down here, sold into the highs. We sold salt pretty much into the high. So these grandiose calls have nothing to do with time. They have nothing to do with price. We could crash to 2,000 and then go to 40,000. It doesn't help somebody manage their position. But it looks like right now we have this turning point and we have this turning point. And we're going to hit the major one before we hit the June cycle. So my answer today was like, what do you do? The answer is nothing. You just sit on your hands. If you have cash, you don't have to do anything. You let everything get cheaper and you are sitting in dollars and you come in and you can buy twice the amount that you could 2 weeks ago. That's a good trade. They don't always have to be banging them around. All right, what are we looking at? EDG versus BTC? All right. We could look at that, Mitch. I'm not really familiar with that coin. You got a big ICO candle kind of messing with the chart. I like the support down here. You got a pretty good cycle. I mean, I'd like to drag this out. Let me try 1 second. I don't think it's going to help. Yeah, I mean, I'm not a big fundamental guy, so I could care less about the project. I mean, I care about the project longer term. Is obviously these guys, any project or coin you look at, are they going to be around for a while? You care about the team, you care about the leadership, the technology. But at the end of the day, when you want to actually manage risk around a position, I mean, price and time is going to tell you majority of what's going on. So the cycle was high here, it was low here, it was low here, cycle high. You're coming into another low cycle. You could nibble. You kind of know where you're wrong. And this is such a low price level. I mean, you can nibble, but to change the momentum here, you got to get above the 8. So I wouldn't put any kind of real capital in this until price can prove itself. Right? Like you can wait for this cycle down. You can nibble. But right here, when you took out the highs, that was the chance to get long. And then you had a little bit of follow through. Same thing here. This is a classic swing line. You want to see price get above the 8. You got to see it start making higher highs. IOTA. Yeah, let's look at IOTA. This chart looks okay. This is versus BTC. So the thing that jumps off here on this guy, this is the start of your new uptrend, and you pulled back kind of halfway and getting a bottoming tail. Your cycle's low. Bottoming tail. Your cycle's low. I mean, you don't really need the RSI to tell you that it went from here to getting more oversold. Again, this is versus Bitcoin, but this looks good. I mean, this is one of those charts that's actually in an uptrend, a long-term uptrend. This was your lower highs. And then you move to an uptrend, right? So do you want to chase new highs? Never. If you're buying up here, you're on the wrong side of the whole cycle. From a timing perspective, you're just wrong. You want to be a buyer here, taking some off, buying the pullback, taking some off. Now is a chance where you can start buying back. So yeah, I do kind of like it down here. I mean, you know where you're wrong, right? Right below those lows. So you play it on a scale. There's going to be a lot of altcoins that look pretty similar to this. But you guys, I mean, I think it makes sense to stay with the coins that are making new highs already. Right? Higher high, higher high. This is where the last major higher low was. This one was too, but you're right at the 200. So that coin looks good. I mean, like EOS is another one. I think you guys like the Creed. I haven't really traded that as much. I should. Just gonna get a dollar chart of IOTA real quick. You see how the dollar looks completely different? So this is an example right here where you would have liked to see the market hold these higher lows. I tried to do it right there again, and you failed right at the 8. That's this whole pullback from here to here. You said the same thing in the majors, is that we couldn't hold these higher lows. Ethereum just broke its higher low. And this is why I cut risk on Friday, because Ethereum didn't break its higher low, and a lot of these others didn't break their prior higher lows until today. But some of the others did. And so that's why we were cutting risk, because if you can't hold the trend, there's no reason to sit around. You might as well just go to the sidelines, raise cash, because at this point you may get a retest of the lows like we're talking about on Bitcoin. If the overall market's going to retest the April lows, why shouldn't IOTA retest the April lows? So why do you need to be in a hurry to buy here? I mean, this is why I use an 8. It's capped the market there, capped the market here. So I mean, you can buy. You just got to be aware that the market, this coin can't even get above its 8. There's no reason to put a bunch of capital at risk and behind it when it can't even get above the 8. Same thing here. Oh, then you have a real money candle. Now you're above the 8. This is the time to get aggressive. And then you get the follow through. We haven't had any of that, right? We haven't had any of that on IOTA. So can you nibble here? Sure. But how are you going to play it? I mean, you got to be prepared for a move back to $1. And that's what I've been saying. I didn't like that we got below the low, this higher low on a lot of different coins. So you raise the cash and then give it a shot again in line with the cycle here next week. I mean, that pretty much sums up IOTA for sure. Oh, Cameron, it went Zen ripped again. We can look at EOS in a second. Why does this chart? Oh, because that was their first day. That was their first day on Binance. I mean, I guess you should see that, right? Doesn't surprise me. I had no idea they were getting listed on Binance. I mean, if you guys knew that, if you're in front of those catalysts, it always makes sense to lay some offers out. I mean, these were the old highs. Put some offers out there and see if they come get you. This coin has good ebb and flows though. And what I mean by that, I mean cycle up, cycle down, huge cycle up, cycle down, cycle up, cycle down, cycle up, cycle down. Do you want to be buying up here? No. You want to be taking profit up there? Yes. I mean, that was an easy place to take some off. This was a pretty good buy. Cycle was low. RSI was low. That chart looks good. Not much to do now. I mean, you're either in it and you already made some money, or the place to buy was at the 200 on that pullback, right in line with the cycle, the oscillation being low. What's up, Santiago? Mainnet launch. Oh, that's all good stuff. I mean, this coin's this coin's bullish, so it's performed well. So I guess they're doing all the right stuff. Just to hit on EOS before I forget. You just have to time these buys, guys, with the overall market. So this has been one of the strongest charts in crypto. I really hate doing it versus BTC. Yeah, I mean, I've never traded off this exchange, but I don't really care. The point is that it's a better view of what the asset's doing when you compare it to Tether or the dollar. So the market didn't break out on April 11th, but EOS was way ahead of the market. It moved to a new high. Can you imagine if Bitcoin moved to a new high since April? So this is one of the few coins that's done that. But now you wanted to be taking profit into new highs. If there's something I can share with you guys without being on our team or taking my training or being a part of my coaching, is you always want to take profit at new highs. So what does that mean? Is this? I mean, there's lots of new highs here if you're staring at a 5-minute chart, but if you're looking at a daily chart relative to the old highs, which are right here at $18, that's a new high, right? It's not rocket science. So most people wait for new highs to buy, the amateur or the really crappy institutional guy with zero timing. They're fearful here. They don't know what to do. They want some confirmation. They chase the highs. Okay. I teach you guys, my guys, we take profits on new highs. And there's lots of other signals here. This was an obvious one. We were long down here. So, but if you sold into here, it's a pretty easy decision, right? Between here and pi, you want to be a buyer. Doesn't mean you have to plow all in today, but I mean, I'm a better buyer of EOS all the way as long as we're above $4. And I'll do it on a scale. I'd be really shocked if the market can't stay above $6, which is the bottom of where this bull market, this last leg started right here. Right? I doubt you'll get that low. But the time to buy is not here. The time to buy is now. And you buy more into the 200 and you buy more into here. And your risk is right there. So I have something I call the art of the size. How you work a position matters, but I could get my average cost. I can buy here, I can buy here, I can buy here, I can buy here. And I can get my average real close to the market. If I do this dotted line where my average cost is, and I can put on the size or the risk I want anywhere in this range and have a nice position. And I know that my stop is right below $4. And so if I build my average cost in to right here, my risk is like this. And I have all of this upside. It's the opposite of what traders that don't have any timing are doing. They're buying here, they're buying here, they're really aggressive here. And then they can't sit through this pullback. This is a big pullback. $20, $21, $22, all the way back to $8. Anybody that bought up here, I guarantee you, is going to be selling you. They're going to be selling you their coin right where you want to be buying down here. We want to take all that pain. You want to take all that pain from these guys right into these levels. You say, all right, thank you very much. You had no process. You had no discipline. You bought up here. I'm happy to take that pain off of your hands down here. I'm happy to be the buyer. Thank you. And then we'll see probably another cycle. So EOS has been on our list for a while. I've just been waiting. I mean, you can nibble here. You got to bounce to a lower high. That's fine. I'm happy for this to go lower. This is where we want to get more aggressive. I know, right, Mitch? I had a couple mentors that it's the opposite. Most people think the complete wrong in trading. Most traders never want the market to pull back. They're scared. As soon as they put the position on, they want it to go in their favor. They can't sit through the pullback. The good trader who knows how to work his position, he's like, man, I can start my trade up here. I can buy EOS right here on the absolute high. Right? I can buy it right here on the absolute high. But if I buy it small, I can still work my position with bigger lots down here and get my average nice, what we call close to the market. So you get your average close to the market. The trader that goes in heavy up here, he can't sit through the drawdown. So his average cost, he doesn't have the capital to be buying more here, buying more here, buying more here, getting aggressive here, waiting for the cycle to turn, hitting it hard here. He can't do any of that. He's way too long, wrong timing, way up here. He's just stuck. And at some point, he's just going to call uncle and puke right on the lows, exactly when you should be getting more aggressive. That's the problem with 90% of traders. I don't care if you're institutional or independent, retail, beginner. I can start a trade small here though, and I know how to work this position all the way. I could work this position from here all the way back to here and get my average low. And as soon as we pop, I could be in the money. But if you're too heavy up here, forget about it. You're gonna be getting tapped on the shoulder by your boss telling you to sell because you're down over 50%. And you're going to be selling right into where you should be buying. And that's exactly what creates the pendulum swing. You need the majority to be wrong. And then that's what creates the energy to swing it back the other way. So when we get into positions, like if I was really bullish on EOS and I never knew about this stock or knew about this coin back here, I was like, oh man, this thing might go to $100. I want to start a position. I can start my position here, but I would do it so small and I would want the pullback. I wouldn't go all in on whatever. If I wanted to put $50,000 or I don't care, whatever it is, $5,000 into this coin, I wouldn't put that whole amount in up here. I'd put maybe like 1/10. If it goes up, fine. At least I'm in the game. But I really want the market to pull back because then I can get my size. The real pro, he needs the pullback. If you're a really big trader, you might not even be able to get the liquidity. There might not even be enough coin that I can buy $1 billion position. I mean, this doesn't really happen in crypto right now, but I know from my experience, if I want to get long, 2-3 billion in treasuries, I can't do it in one day. I need the pullback to work into my position. You need it to go down. You want it to go down. That's how you work into position. You want lower levels to buy more. I can't get aggressive up here. I can't work my average cost. I need the pullback. So most traders, they buy and they're so scared they want it to immediately go in their favor. You want to get in that mindset where you want the pullback. You want it to go against you. To some extent. I don't want it to go against me forever. But I put myself in a situation where it's like, I want the market to pull back. Because then I can buy more. It's the complete opposite than the way most people are taught to trade. It's not averaging down blindly either. It's not saying I'm just going to buy more because I'm in a losing position. That's not what we're talking about. BTC about breaking pi. Well, Adam, we got a couple Adams in our room. I'm not sure if you're on our trading team. If you guys aren't on our trading team, kind of like, well, how do I become a part of that, or what the hell is he talking about? Block Edge Capital is the name of our digital asset management firm we're building. We're building a trading platform called Rhythm. But right now, we're kind of bringing this all together in one site. But if you go to jenkinsrm.com, we used to do a lot of work with Forex traders. We still do a lot of work with Forex guys. Forex is the best market to day trade. I mean, I came from trading treasuries. Anyway, but right here in this chat room, jenkinsrm.com, we have this is free to join the chat room, but our crypto team is just $99 a month. And that gets you a part of our River chat. We're putting in real-time alerts and buy and sell signals on our platform from our model. But what we've been talking about on BTC, I put a video in the room last week about how the pi line. Let me hide this. the pie line doesn't matter as much when it's already been traversed. So what tends to happen when you're in a range, like a range bound market, is you're going to get the moving averages are going to get traversed. I mean, they go above it, they go below it, they go above it. And that's indicative of a range trade. So let me just show you what I mean. So here on Bitcoin, anytime you move away, let me just drag pi out. So if you guys don't know what the pi line is, I'm not going to get into it right now. That's this green line. It's a cyclical indicator I came up with. It's not rocket science, but it's very profound and powerful because it has to do with time. And so time is actually more important than price. And so when you have market move away from it, guys, and then you come back to the average, okay, that's meaningful. And then you move away from it and you move back to it. And this is an area, right? We don't get our panties in a bunch because we're below it, and then this is an area. Like you could have easily poked through pi and it's still a buy. But you move back to it, you get away from it, you move back to it. But the more that line kind of arcs and price starts to consolidate, it's gonna tend to move into more of a range bound scenario where markets will go back and forth above and below that, and that's indicative of a range trade. So whether it's the 200 or a lot of times a pi line, and price will start to do this back and forth above it. And that's kind of what I said this a couple of weeks ago, that even though we failed right on with the cycle in front of the 200 at the whole number at 10, which was a big deal, that as we pull back to this line again, I just didn't think it mattered as much because it's from here to here mattered, the bounce from there mattered again, but now it's starting to move into this sideways environment, and the odds of it getting chopped up, meaning it goes back and forth above and below it, we call that getting chopped up. Range trades, you get chopped up. It's a lot of choppy price action. So I thought that this moving average is going to get chopped up. Pi is going to get chopped up, and that's exactly what's happening. So we have the lows here. We have the lower high here relative to there. And now we just put in another pivot at 10. This is the most important level on the upside now, 10,000. But prices, I talked about that. I was like, I don't know if it's going to be that meaningful. I mean, it's still there. We want to watch it. But I could easily see that we already kind of traversed it here. It's kind of starting to roll sideways. That more than likely we're going to be below it. We're going to be back above it. We could be below it. We could be back above it. We could be below it. And that's just because the market's digesting on the weekly and monthly level. And it's just a range trade. So I liked it when you move away from it, back to it, away from it, back to it. But now it's just kind of, it's not as meaningful. I mean, we were watching it. I mean, I cared that it held here on the 18th, and then I said we got to get above the 8. You could barely close above it, and then we just made a lower high with the cycle. So that said, because we're traversing it, it kind of loses its impact. So it's going to go like this now, right? And if we come here and we bottom at 6. If we come back up, it'll matter on the upside, but it's not as meaningful to me on the upside either. We could get a lot of that. I don't know. It's kind of hard to explain. But what's happening is we're consolidating. So we had a crazy, probably one of the biggest runs in the history of markets, right? Got everybody's attention. I mean, we went 10x a couple times. We went 2,000 to 20,000, 10x in a very short period of time. And we went vertical. We call that a phase transition in physics. When you go from a physical state to a liquid state to a gas state. If you look at the chart of the temperature, it does the same thing. It goes vertical. And that's not sustainable. So this was not sustainable without some sort of falling back to earth, right? I mean, that was pretty obvious, actually. But now we made the higher low, and so we're basing. That's what's happening is we're basing. We're probably not going to get a rally till the second half of the year. Maybe not even until next year, unfortunately. This is what it is. So we're basing, which is just part of markets. It has to digest all of this energy, right? It's digesting that. And so we could, I mean, if you put a gun to my head, we're going to break out from that at some point, but there's still a risk that we break 6,000 and you have like a throw in the towel type of move. All the miners will say that, oh, you know, Bitcoin mining is dead and Bitcoin is dead. I mean, if we break 6,000, you're going to have so much. You could easily break this wedge and have another big 50% drawdown. That'd probably be the buy of a lifetime on the next leg up, actually. But this is what we're experiencing right now. Is really we're just working off this amazing move. It just takes time. Buy the AMD puts on Dialgo, yeah. Or what's Nvidia doing? Still on the moon. I'm gonna look at the chart here. Hold on, I'll switch the screen in a second. Alec, you got quiet. Jason doing too
Yeah,
much talking.
I'm just learning. It's a lot of good info.
Guys, this is a good chart to watch in Stockland on the crypto space. Obvious, one of the biggest. This is another just amazing move. So here's the Nvidia chip maker, right? Crazy. Look at those higher lows though. Right on the 8 on the monthly. Still a bull market. What do we do? They went from 40 to 260. It's a little bit of alpha there. This is just a power trend. All the bands are positive, making higher lows at the 30. But you know, blockchain mining, Bitcoin, all that, all the mining industry, this has been a big part of that run up. The level to watch there is 210 now, 200. But Santiago, yeah, AMD. I would trade Nvidia over AMD though. Adam, what's that? Adam and Eve, gigantic treasuries? I'm not familiar. What do you mean? I mean, I know treasuries. I don't know what event you're talking about. 13 strike. Santiago, I don't know, man. I think NVIDIA will fall further because it's gone more vertical. Think about it. Look at the monthly chart. It looks like, I mean, yeah, it went from 0 to 13. It looks like it's been basing. It's trying to get above this wedge. But on the downside, it just, to me, doesn't have as much to fall. I mean, it's been basing. It might make another leg up. I mean, a percentage move from 13 to 10 is still a great trade. But this is kind of a brand new uptrend versus if you're going to really make money on something like a nasty reversal in blockchain. I mean, look how far this could fall. Just getting NVIDIA, if you were to break the 8 right there, if you break the 200 in our model, you could fall to 124. To me, that's a much juicier trade. And you would still be long-term bullish. Like, if you were to break that and you were to get the pullback, I guarantee you, CNBC, everybody be like, oh, NVIDIA is going out of business. You could probably buy all you wanted right there, 125 to 140, and be at new highs. I mean, that would just be an awesome pullback long-term. Assuming that the global macro picture didn't roll over to like a recession. But I just like that risk reward better. If there's a bigger, that's a lot of points, 211 to 124. Alec, what's the name of that Bitcoin ETF, the Grayscale guys? BTG.
I'm not too sure.
You guys should know. GBTC. I don't even know if you can short this. It's just the same price of Bitcoin. Because anybody that's in the institutional world, this was a business idea by Siebert, whatever his name, the Grayscale and Digital Currency Group guys to build this ETF. But you're paying a lot to get involved in this ETF up here. You could just buy the spot price, and there's probably like a 35% premium on this. There's a lot of funds that chase this. Trying to get, anybody that's institutional that didn't want to buy the futures, wasn't allowed to buy the cash market and crypto. They bought this fund. I guarantee you they bought this into the end of the year. I saw a couple articles. One of the best performing funds has like 0 Bitcoin exposure now because this did this. And they got recommended as like one of the best funds because they were up like, I don't know, 300, 400%. And this was one of their biggest exposures. And now their exposure is like less than 5% to this ETF or not, whatever it is, investment trust. Right when you should be buying, like you look at pies right here, you should be buying this all day long down here. It's just classic. The institutions do the same thing. They chase the performance. What are we talking about, Adam? What are we talking about? Treasuries? Well, I've been saying 118 was maybe a spot to go contrarian long. Looks like we held 118.10. So you get a little bit of a bounce here, but this is a long-term bear market in the bond market. It's been going on for a while, but we've very oversold. This is a very crowded short position in short bonds. But you're not going to see a big rally in treasuries unless the stock market and riskier assets break. So unless stocks take out this low right here, which we made in January or whatever it was, February. If we break that, then you can see the move down here to like 2,300 in the S&P. That would cause a pretty good rally in the long end of the bond market. So I covered some of I had a very small core short in 10s. It just hasn't been very sexy trade. It's just kind of been dripping. Well, you can see we held 118.10. It'll be interesting to see if that kind of gets legs. We had the yen make a pretty good up move too. That's kind of a flight to quality trade, being long the yen. Dollar yen came off really hard last night. So you sell dollars, you buy the yen. It had a pretty big move. You saw treasuries rally. Those are kind of the traditional flight to quality trade. So I don't know. It just came from new lows. I'm not surprised that it had a rally. I think there was a 5-year auction today. It's probably we're probably supposed to short more treasuries at 120 up here at the bands. But I'm not a bond bull just yet. I mean, I want to see what the flight to quality is. Even though if stocks crack, I'm not so sure that place to be buying is the treasury market. I mean, if everybody's short, you might see a rally in the long end. But that hasn't been our call yet. All we did was bounce from a lower high. This is still very bearish trend. What's up, Vlad? Any advice with those about shitcoins now they're down? If you're in a loss, yeah. What altcoins are you talking about? I mean, obviously, guys, I would kind of encourage you to join our team because the time to sell on a lot of this stuff was last week. I mean, it just was. I'll give you an example. Salt's really leading the way here on the downside. So like you can buy into a dip. This is a couple of the signals that we issued. We're buying into this dip and then we got a rally and sold right into pretty much into the highs. And then you can nibble a little bit, but you it's the same thing that's been going on in the market. If we couldn't hold these higher lows, we're going to retest the lows. That's what I've been saying on Bitcoin. We can't hold the higher low from last week, then we got a good shot at testing 6,500. So I'm not surprised that some of the alts are the first ones back to these April lows. I don't think you need to be in a rush to buy. I mean, we were selling up here. We were buying here, taking profits, bought a little bit back, sold some out, did buy a little bit here, but that's okay. This is the spot to be buying more. I just don't think you need to be in a rush. You don't always have to buy support when you come down to it. You can kind of wait and see what happens. This is versus BTC. You want to look first tether. same thing, right? Here's your higher lows, it broke. So you have a lot of alts that are kind of doing the same thing. They couldn't hold their higher lows from last week, the week before that. And now you're going to test these major levels. Probably the same exact thing here in Cardano. Same thing. Couldn't hold the higher lows. So now this is in play. So I just don't think you have to be in a hurry to buy these names, guys. I mean, if you're like, if you don't, this doesn't show all our moves, but if you weren't taking any into we were taking above 35, 36, 37. If you don't sell on the rallies, it makes it really hard to kind of add back in on the weakness. You're kind of stuck. If you just hodl, if you bought well here, well, now you're kind of back at the same levels. You're just wasting your time. But if you buy here, you take off well, you can kind of work back into that same zone. So I hate to tell you to sell now after we've had a 3-day drop. That's a pretty big percentage move, right? My point is like, why wouldn't you sell with the bounce with us? I mean, you pretty much picked the high on salt there. It's just one example. And it's not always like this, but this is part of managing the trade. If you're buying here and you ring the register up here, that's like a 10, 50% move, if not more. What is that? Let's see. Where is that? Right here. 35% move off that little wiggle, right? So if you don't take, like we issued a sell signal up here after buying here. We're buying here, scaling out, getting more aggressive here, taking a big piece off there. Well, now I'm in the opportunity because I sold there. I got more to work with down here. But I hate for you not to sell here and then be selling there. That's not the right timing to be puking on the lows. This is a time where you want to be kind of nibbling or just waiting. This is true of a lot of the alts. Like, kind of missed the chance to come out of some stuff already. All good, Vlad. I like Monero. Doug, what are you talking? Which wall are you talking about, bud? We're talking about Bitcoin. Salt, we got to keep an eye on that. That's getting to pretty cheap levels, though. That'll be one of the first names I add back to. But you can see, I'm not in a hurry, guys. I'm pretty patient. I just kind of learned that over the years that when I have a cycle that's out to next week and I have cycles that are still only 50% the way down, it's so much easier just to sit and wait than I used to try to trade the same thing where I felt like I had to be involved in every move. You got to trade every move. I got to be involved here. I got to be involved here. Sometimes it's so much easier just to let the market come to you than trying to buy lower lows. I hate trying to buy lower lows. Like, what they tend to do is give a little bit of a bounce and then make another low, and a little bit of a bounce and make another low. So we want to try to trade what we call phase 3, which is on the right-hand side of the cycle. That's when you want to get aggressive. There's not that I got aggressive. We had phase 3 type of stuff on Bitcoin. And actually the altcoins turn first. Cardano and stuff turn first here. This is what I'm talking about. Some of you guys just got to join our chat room and go to join the crypto team. It's $100 a month. It's going to save you and make you so much money. I mean, $100 is kind of goofy. if you're serious about trading. But we were buying here aggressively. This is what I call the right-hand side of the cycle. Here you can buy. You got to be patient though. When you get over here, that's the time to be aggressive. When you get a 2-day pullback, you buy more. Now is not the time to be aggressive. Like I might not even buy anything else till Friday or Sunday. Like people want me to be making calls, but the only thing to do is covering shorts, really, like we were doing on the short side of Bitcoin futures. I mean, you got to be patient here. And then there'll be a time to get more aggressive if we hold, over on this side of the chart. Monero. That's Ripple. Monero's getting back to levels I like. But again, I'm just kind of being patient. I think you can time it up, guys. If you could nibble here, I think you might have a shot at buying a little bit better. Just let for this cycle to play out. Let Bitcoin play out a little bit lower. And then I agree. This is going to be, you don't want to be buying here. You want to be buying here and here and here. So we're in this cycle now. I mean, we might break. Why does that say 50? What's up with that? I don't know why that chart was stuck on like Ripple there. All right, here's Monero versus Tether. This might be the daily chart. Let me refresh it one more time. It is a daily chart. That was a 4-hour. Here's a daily. Okay, so you're already back to levels that this is the buy zone. So this is one of the names that you can, I like down here. But again, you don't really have to be in a hurry to get aggressive. You could buy it, you can nibble a little bit, but then you can also wait for this intermediate term to turn back up. Because there's a chance that you buy here and the market just craps out and we break 6,000 and then everybody's going to be panicked. So you can buy here a little bit, but you've got to really turn this intermediate term back to bullish. You can see that on like the 4-hour or hourly. So here's a 4-hour trend. I mean, you're at oversold levels. Lower highs, lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. So you're contrarian to the intermediate term trend. So yeah, you could add. You got to be patient. The time to get aggressive is when this trend changes and you start making higher highs. And you get on the right-hand side of the chart, and you can be more aggressive. Because if we don't hold here, you're going to be glad that you didn't get aggressive on lower lows. Again, this is buying lower lows. You can do it. You can go contrarian. You're just, the time to be aggressive is when you have higher right here. This is a new higher high. Then you get the follow through. It's just about understanding identifying the trend and then timing it up with the cycle a little bit better. All right, guys. Well, kind of a late day. I actually got an early morning. I'm going to LA. I got an early flight, so I got a couple things to finish up on. We've been doing some more of these sessions these live sessions together on a weekly basis. We're going to do some more for a lot of reasons. But if you guys are new, this is our asset management firm that we're building out. We have a project called Rhythm that's in the pre-ICO stages. There's a trading platform that it's basically bringing our institutional model to independent traders and to the whole digital space. But if you guys really want to get involved as quick as possible on the real-time alerts and just a part of our crypto team, just come to jenkinsrm.com underneath the crypto education. There's $99 a month. We'll get you in there. But then I got two other services I offer. This is a 9-hour trading course on my whole model that I built. So when I covered all the big banks and a lot of buy-side firms, hedge funds, Balyasny, we have guys at Ivory Capital we were just in meetings with last week. That this is a directional model that we use, and it works for all markets. It's a great value. I've explained it a lot. That's what that is. And then this is our live trading, which we do 2 times a week, Tuesdays and Thursdays. And that's where, if you really want to kind of grow as a trader, kind of where to go, where to hang out. I mean, I did $10,000 this week just shorting the euro. I've got guys, trained literally hundreds and hundreds of traders over the last 10 years. And we just have a really good directional model. So, that's kind of how you get in with our really tight group of guys. And, but we're trading everything from live cattle to obviously crypto. Interest rate products is where I cut my teeth. Are you guys good? What are you guys doing for the long weekend? Cameron, all right, buddy. See ya. We'll probably get some good crypto moves it seems like the longer the weekend, the more of like traditional finance it doesn't pay attention. Like we'd be sitting on the trading desk right now. If you're on a big desk and all the head traders are already on vacation, this is such a tough time to trade. Nothing would get done. You just put orders up above the market, below the market. Nobody cares. People are playing poker on the desk. So this week is always a tough week. You don't get a lot of energy or real risk taking going on. And it seems like when that's the case with Wall Street, then crypto market just is all over the place, which makes it nice if you want to trade, on your long weekend. All right, Adam, welcome. Mitch, you're short in crypto all weekend? Studying? All right, Magnus. All right, guys. Well, hope to see some new names and faces in the chat. You guys can message me. One of my best buddies is getting married, so I'll be in Malibu, and it might take me a little bit to get back to you, but I'll try my best. And we'll see what happens here on the euro, though. It's still got a lot of week left. I do want to see. We don't have a monthly close till next week, but But this pie level, guys, matters on the euro for sure. We covered a lot of shorts into it. I guarantee you, nobody's going to show you this long-term trend. It's pretty simple. Trading is simpler than you think sometimes. Failed right at the top of the range, 125. So stay bullish the dollar. It's been a big move, but any type of rally is an opportunity to short. And then we'll see how we close this week around our pie line down here at 117. All right, guys, enjoy the rest of your week. I'll hit you guys up in the chat.